Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, September 11th, 2016. My thoughts and prayers go out to anybody that lost somebody on 9/11. It's amazing that it's been 15 years. I actually lost one of my best friends, Johnny Salomon, and today's always a little bit of a rough day, and you know, I'm sure it's for everybody that suffered a loss in that time. But Friday, we finally got some action in this market, and it's like I said, it didn't really go really the way that I was expecting it to go. Like, I thought we should have been heading lower earlier than what we did. And instead it went sideways and everybody was looking up. And I was showing you that, you know, just the different types of emails that I was getting and stuff like that, that everybody was looking up at the 2250, 2300, and they pulled the trap door and everybody got caught long, and we had a massive drop. So the S&P was down 53 points. We wiped out basically almost 2 months of trading, almost 2 months in one day, and this is pretty much how this market has been. It's all in, boom, bust, or all out. So I'd mentioned that we have these are our different say fractal patterns, and I said I wasn't sure if we are actually in a purple here and we're going to get the big move down, or we're at the yellow. And basically, really what the difference is that if it's the red, let's say it's this move here, then we're probably looking at a move to come someplace down into the 2086 level, and that's where it should bottom out, and then we would rally back up again. Now, if it's the yellow, then we're heading all the way down sub 2000, and this actually makes sense because we have the patterns are bearish. We know the wave count is not bull friendly, and on top of that, you know, if you look at the technicals right now, they just started rolling over. So there's plenty of gas in the tank for the bears to push this to push things lower. But right now, you can see that we made it through this support right here, and that was at the 2131 level. And now we're sitting at this support right in this area here. It's pretty close to it, and that's right around the 2115 level. So if we come down, you know, say another 12 points in that range, you got to keep an eye on this support here. If this breaks, then we get a panic move that's going to come all the way down to 2031, and it's going to be in a very fast manner. And this is why I've been saying that no matter what was going on up here, the larger point move is going to be to the downside. And you know, hopefully Friday was kicking it off, but you know, we want to just I wouldn't want you to be just jumping short, especially when we're right at some support right now. If that breaks, then yeah, you could jump right in, and like I said, 2057 or this gap here at the 2035 would be the next target. Now we also have targets all the way down at 1860. I meant targets. We have gaps that are open all the way down at the 1866. So there's this move right here was built with a quicksand foundation. There's nothing solid about it, and if you know the markets are going to do what they've been doing for quite some time, you know, all this gets taken back in a very fast manner. If we take a look at the 60-minute chart, you can see we're getting close to the oversold levels here. But the pattern, here's the support that I was just showing you. And if we break through it, then I'm anticipating that the next move will come anywhere to the 2068, 2033, and it will come in a very fast manner, especially if this support breaks. So that's pretty much it on the 60-minute chart. And if we take a look at the 15-minute chart, really what the bulls have to do to try to stop the hemorrhaging is get it through this right around that 2156, 2160 resistance level. And if they do that, then we'll probably see a move somewhere up into the 2168 or even test this 2172 level. But you can see we don't have any bullish divergences. So to me, if we get a bounce, most likely we are going to see some more selling. And then once we see a bullish divergence on the 15, that's when you can maybe start anticipating that we're going to get a bounce. But I wouldn't be looking to trade that. I think I would just use it to continue to build a short position, because like I said, I don't believe that this is over in any way, shape, or form, and I think there's going to be a lot more points to the downside before everything is done. So with that, enjoy the rest of your weekend, and I will talk to you guys in the morning.